Hey, I hope everyone is doing well. Let me just check the audio here. So one of the things I wanted to, let me turn this off. One of the things that I wanted to share that I think is a really kind of important concept. Everybody understands it, but they don't understand it to the degree. And one of those things is understanding to how to record your trades. What do I mean by that? Everybody knows that it's important to journal your trades. And one of the things that people end up doing that doesn't help, that can actually cause a lot of problems, is let's say they have an idea, they have a trading plan, and I'm curious to know what some of y'all's trading methods or trading plans are. But let's say they're trading breakouts, and they're going to trade breakouts that are in the first leg. And one of the things they end up doing is they pull up a chart. So I'm just going to go ahead and share a chart, just since why not? So we can see a chart here, and we're looking at it. And let's go to yesterday. There are all sorts of trades here. And let's say I'm trading breakouts and second legs. I sell the close of the first bar and hold for a second leg down. Let's say I take that trade. I sell the close of bar 2. And then I sell the close of 18. And then who knows? Maybe I end up selling the close of 30 and 31. And I take those 3 trades, but I sell the close of 30 and 31, and they end up getting out somewhere way up here. So I, in essence, just ruined all the trades I took. And one of the things that I think that really hinders traders is they end up forgetting, kind of almost getting amnesia about this trade down here. And that's really, really costly. For one, because you won't correct the mistake. And therefore, let me just do this here. And therefore, if you never correct the mistake, you're going to continue to make the mistake over and over and over again. So for those of you that are watching, I'm going to hide this for a second. I'm really curious to see how many of you actually take the time, how many of you review your trades at the end of the day or end of the week? I'm very curious to know that. And in a second, I'm going to talk about how to fix those mistakes how to fix or improve your overall trading by doing a certain thing. But before then, how many people actually take the time to review their trades? Okay, I do, but not regularly. That's a common answer. Another common answer is people don't actually they take their trades and they look at the trades and they really measure the day based on P&L. And measuring the day based on P&L, I think it's a really, obviously if you made money, it's better than losing money. But if you really measure on P&L, first off, how many people think that measuring based on P&L is a good thing? Should we measure our trading based on P&L? Let's just see what you guys say. Someone says they look at their trades over the weekend sometimes on the weekend, they look at it throughout the whole week. No? Okay, measuring P&L. This person says no. Yeah. There's a guy named Andrew Miniker, who I think has a lot of really good stuff on YouTube. I think he's pretty knowledgeable. He's a trader as well. And one of the things he talks about is it's really important to categorize your trades. And you've probably heard me say this before. And again, I didn't make this up. And I'll put a link to his name to give him credit for the idea. But basically, the idea is every one of your trades should be recorded from a type 1, 2, 3, or 4. A type 1 trade is a good process, good outcome. You followed your plan, you made money. A type 2 trade is you followed your plan and you did make money. You did not make money. A type 3 is you did not follow your plan and you did not make money. So what do we think a type 4 is? What do you think a type 4 is? Anybody? Type 4 is you did not follow your plan and you made money. So which one out of all of those, type 1, 2, 3, or 4, which one do you think is the most costly to your actual trading P&L? I'm going to give everyone a second to see if they can figure that one out. One of them is the dramatically, I mean, it's actually really devastating to one trading. Type 4, exactly. Great job. Type 4 is actually the most devastating. And it seems really, it doesn't seem like it would be, but if you really think about it, let's just take I'm going to pull up a chart here. See how I can do this. All right. Here we go. So let's say that we end up selling down here. So we sold this close and we end up just scaling in all the way up. And then we're sweating up here. We're really, really nervous. We know it was a bad trade, but we took it anyway. And we end up getting out down here and we made a little bit of money. But our risk exposure was many, many, many more times than the actual money that we made. Now, let's just say here we go. So let's say here we do the same thing. We sell the close of bar 3. And let's just pretend that this day was Monday, hypothetically. So we sold, we scaled in, we had a huge risk exposure, several times our risk, and we end up making money. So it was a type 4 trade. And now, even though we don't realize it, we tell ourselves over the weekend that we're never going to take that trade again. We're never going to scale in like that to a trade and expose ourselves to that much risk. We tell ourselves that, we write a sticky note on the desk, but we end up doing it still. And what ends up happening is muscle memory. A couple bars up, you sell thinking a leg in a trading range, and before you know it, you realize, wait a minute, this market's still going up. I can't take the loss. Well, I remember, the prior trading day, I was able to sell and scale in and make money. So I'll just keep selling and scaling in. And you sell more, you sell more. But here's the problem. The market closed. And let's just say this was 81 bars. There's plenty of examples we can find. Let's just find the full day to really get the... Yeah, let's take this day. Let's say instead of selling, we're buying, and we just start buying all the way down. How would you feel if you bought and you got stopped out down here because you couldn't take the trade, you couldn't take the risk, or you got a margin call, or who knows? Point is, type 4 trades, it only takes really one bad type 4 trade to actually ruin you. It was one of the interesting things I remember hearing Al and Al Lee talk about in Orlando. And what they talked about was, Al made a comment. He said, really, a trader is just one trade away from screwing up forever. And that's a really kind of sobering thought when you think about it. All it takes is one really, really stupid idea to really screw up. So therefore, what Andrew said is the number one thing to do is to record your trades. And if you start recording your trades and you start measuring your performance based on type 1s, 2, 3s, and 4s, in other words, have more type 1 and 2 trades than 3 and 4, what you're naturally going to do is you're going to naturally improve your trading. Now, here's the challenge. And I would challenge everybody here, and I would love for someone to comment on this video after they do the exercise, and because I'd like to talk about it further. But how many of you guys can actually, so this is the challenge, how many of you can actually go back on the week and document, give a number. I took 50 trades this week, or 40 trades this week, or 30 trades this week. X percentage of my trades were type 1 and 2, and X percentage were type 3 and 4. I'd be curious to see who could actually do that. And here's the challenge of that task. In order to categorize your trades, type 1, 2, 3, and 4, what do you think you have to know what to do? Like, think about it. What do you have to do in order to categorize your trades? Who thinks they know the answer? And it's what James and I a little bit hinted at yesterday on one of these live streams. So what do we think? What do you have to do in order to categorize your trades? I'm going to give everyone a second or two because I want to see some responses. Steve says one of the best rules for trading is always in. Yeah, that's basically kind of it's a way you can call it market context. It's basically deciding what the highest probability direction is and choosing that direction. Choosing a system is true, but choosing a system is also very broad. Like I'm going to trade breakouts and second legs. Let's say that's my plan, and therefore I'm going to trade breakouts and second legs. Well, the problem with that is the only bar on a chart that's not a breakout is an inside bar. And therefore, if I just trade breakouts and second legs, how do I know what breakout I'm taking? And that's what James and I were talking about with yesterday, signal bars. In order to, a signal is just what gets you, is basically the entry into a trade. It's your trigger for getting into, let's say, a setup. But in order to know if this was or was not my signal, you really have to understand what it is that you're doing. So yes, you have to have a system, but you've got to know all the ins and outs of that system. And so the reason, and someone else says, first you have to have a clear plan. Yes, you have to have a clear plan. You have to be honest with yourself. That is something we're going to talk about actually in a minute, and that's kind of my next topic here in just a few minutes. Have defined setups and signals. Yes, you have to have defined setups and signals. Absolutely. Trader's imagination, sure. You got to have a little bit of that. So a good litmus test, if you will, or a good test to see, do I actually have a good trading system or a good trading plan? Go back over the week and actually categorize your trades. Can I actually, and the tricky part is you got to be honest with yourself. Because here's the thing, if your plan is just, I'm going to take second entries at the bottom of a trading range, that's good. That's a starting point. But when you really look at the chart and you really compare your trades, can you be honest? There's one thing, let me back up for a second. It's one thing to look at a chart and say, I'm only going to trade in the direction of if the market is below the moving average for more than 10 or 15 bars, I'm only going to look to sell. It's one thing if this is your situation and you're buying and the market is clearly 10 or more bars below the moving average. Obviously, that's a type 3 and a type 4 trade. You're breaking your rules. But it becomes more difficult when things become a little bit more gray, such as all of this. And so the point with that is a good test to see, are you actually are you actually following what you say, your plan? And do you actually have a plan that's actually a reasonable plan, is to see, can you categorize your trades from type 1, 2, 3, and 4? So the challenge with that, and again, I'm really interested to see who would actually, because I honestly don't think many people will, because quite frankly, it's extra work and trading's already hard enough, and therefore I really don't think people will do it. But I'd be really curious to see who can put in the comments what percentage of type 1, 2, 3, and 4 trades they had over the past week. And even if it's over the past few days, I'd be really curious to see. One of the things, and this kind of goes back into how do we improve our trading? Well, one of the things we talk about in Systems Academy, and anyone can do this, is, there's an individual last year who, one of the first things we do is a back of the napkin study. And it's basically, we give an idea, breakout and second leg. I always recommend a 3-bar microchannel because it's pretty easy to see. It's 3 consecutive bull bars or 3 consecutive bear bars. You got to have a microchannel. It's a reasonable thing to be able to identify. And so we start with the back of the napkin study. And long story short, someone did a back of the napkin study and had a video call with them afterwards. They were a little bit frustrated and they said, I found 100 trade examples and the results were, minuscule. They were bad. I actually lost money. And so he was frustrated and we looked at it. And I looked at his Excel sheet and I said, okay. I said, let's take a look at the results. And I said, I want you to categorize everything by, I want to know the context was on each trade, were we in a trend or a trading range? And then on the other part, what leg was it? And we started looking through the results. And when we looked through it, we found a very clear example of one particular thing. And I said, okay, what if we removed these 15 or 20 trades that had to do with this certain leg in this certain context? What if we, and I said, could you identify that on a chart? And he said, yeah, that was easy. And I said, okay, what if we just removed it completely from the trading? And he said, and we looked at that. We looked at it, and all of a sudden their performance, this was just a formula on an Excel spreadsheet, the performance went completely in the opposite direction. It wasn't spectacular, but it became profitable. And so what's the point? The point is we looked at the bad examples and we got rid of them. So how do you do this with your own trading? Well, it's pretty simple. Type 1, 2, 3, and 4. If you have a lot of if half of your trading is type 3 and 4 trades, you start to look at the trades and think, okay, how do I reduce those trades? It's kind of like, another example is download all your trades over the week and categorize them and start looking at, one thing you can do, categorize your trades. So put them on an Excel spreadsheet and put the P&L on there for each trade and sort the trades from the largest loser to the best winner. And start with the largest loser and think, okay, what was the trade? Was it above, was it in the direction of the trend? Was it not in the direction of the trend? Was it in a trading range? And keep going down. And what you might find is, actually, I'm pretty certain you'll find, is most of your trades, the bad trades, are going to have some similarities to them. Now, because someone mentioned it, be honest with yourself. This is the last thing I want to leave you guys with. Honesty. One of the hardest things about trading is, for most people, you're by yourself. And the challenge with that is people say, hey, I'm gonna take my system, I'm gonna trade my plan, whatever that plan is or that system. And what they end up doing is they make the system, they make the plan, and all of a sudden they can't trade it. Why can't they trade it? Because they're looking at a chart. They know that they're not supposed to trade in a tight trading range. They know they're supposed to wait for a certain number of bars above or below the moving average. So what ends up happening? They see this big bar on 13 and they think, oh my gosh, I can't miss a trade. I'm scared. If I don't get a trade today, then something bad will happen, or I don't want to miss some crazy move. So they buy this close and they get stopped out, and then they get really, really upset. So what do? They see this reversal here and they think, oh my gosh, I got to buy, and they buy again, and then they get stopped out again. And then they see this really big bear bar here, and so all of a sudden their trading plan that may have worked completely went haywire, and they broke the plan, and therefore the plan is no longer working. One of the things that I thought was really interesting in Systems Academy, and I'm bringing this up just because it was very interesting to get to see the kind of interaction, teaching people, meeting with people on a weekly basis. So I got to know them really, really well. And what I found very interesting about the group, when you start to get to know them, when you see everybody, start to get to know everyone pretty well, you kind of know the strengths and the weaknesses, and you get to kind of see there's always a few people in the group that are kind of going to be the raw kind of, the hold everybody accountable, or hold everybody to their feet to the fire. And I'll never forget, it was pretty cool to see. Some of them, there's probably 15 people in the class, I'd say. There were 6 or 7 that would every day get on a video stream, or video, you can call it, they had their own little trading room, 6 or 7 of them, and they would trade their system together. And what I thought was really fascinating about the idea is they would call each other out if they broke the rules. And the other thing is they use, I think, TradeZilla, which is a pretty good platform to record your trades. They would send everybody their trading results. And there was an individual who told me he built a system pretty quick and he was able to do it. And he said, oh, this is, he told me at the end, he said he thought this would be really, really easy. He built the system. He said, wow, this will be easy to trade. And, let's say he took him 3 months to kind of build it. And all of a sudden, he said the next 3 months were like a train wreck. He couldn't trade the system. He tried, and he would always get upset. He would take a bad trade, and all of a sudden, something bad would happen. What I mean by that is he knew his rules, but he would buy here, get stopped out, and get really upset and be unable to trade. and he would start being impulsive in revenge trading. And he said after a while, it got to a point where he would have to send his, they had kind of accountability partners, if you will. And every day he had to send, or every week he would have to send his trading results to his kind of accountability buddy in the Systems Academy class. And he said it got to a point where he would think about every trade he took. Do I want him to call me out on this bad trade? Because I know he's going to, not me, but the other student in the class. And what it really showed me that the hidden value, and I'm not talking about Systems Academy, I'm really talking about the accountability of people. What it showed was being in a situation where you've got to actually share your trades with someone else, and someone is really going to look at your trades and say, did you actually follow your plan? Will help you follow your plan. So there's two things I'll leave you with. One, you have to know what your actual plan is. And plan and system, a trading plan and a trading system are very vague words. A trading system is really a giant machine that's turning with a bunch of cogs in the wheel that are spinning. So it's a bunch of smaller things that make up one large system, one large plan. And if you can't really write out and explain your system, you don't have one. Number two, if you can't, and the most important is if you can't categorize your trades, type 1, 2, 3, and 4, you don't have a good system. And the other thing is this. If you look at a chart and you really don't know what you're doing or what you plan to be doing when you start trading, that's a big, big problem. I think of trading as, I had someone in Systems Academy last year who was a professional athlete at one point, and he made a comment. I asked him, he did pretty well in Systems Academy and was able to, made some pretty impressive work. And there's several of them that did. And when I asked him and he was able to do it reasonably quick. And then so I asked the guy, I said, okay, why is this? And we started talking, and he made a comment how he played in the NFL. And he made a comment how when you play college football and then you play the NFL, and you're on let's say you're a tight end or you're a receiver, and the coach calls a play. You do not have time to question what you're supposed to do. You have a few seconds to get up to the line of scrimmage and run the play. And the comment he made was basically, if you hesitate on your assignment or your role for a split second at that level, the NFL, you're going to get crushed and you're going to get beat, and eventually you're going to get fired. And what was fascinating about this individual was he had an extreme amount of discipline to stick to his one system. There were other students who they had a tougher time to build discipline, but once they started to build the discipline, things got easier. And so discipline is a really, really important thing. I'm going to take a look at questions for a quick second and then wrap this up. So if you have any questions, feel free to ask them, and I'll respond to at least a few of them before I go. Okay, so Keeve says, I think we must look at ourselves in the past. In our past, we learned some things very well. So based on that, we must take time and work hard. For example, I learned math very well. How? Yeah, for sure. I think one of the best things you can do is make power. For me, I'm a very visual person, and I resonate a lot with Al with making PowerPoint slides. And so one of the things I like to do is, if I don't like expanding triangles, I want to make a lot of examples over expanding triangles. And that'll be, I find that very, very helpful. Mohammed says, last week, 42% of my trades were not in my plan. And I found that I broke it when I was going to draw down. Yeah. So one of the things, so how can we fix this? One of the things I think that's really, really important, it's kind of another thing that this Andrew Mineker says a lot. Don't trade your P&L. So basically, when you're thinking about P&L, you're all of a sudden thinking about this one trade, and this one trade being this one trade matters. And when you're trading it's kind of like, Ali, one thing I love about Ali he talks about, it was in PTM. I think this was like one of the first or second PTM sessions. And if you want to learn about PTM, you can just go to the website, the Quant Systems. But I call it his Saturday classes, where he kind of does a classroom session of trading. And he talked about how trading is kind of like a Walmart factory. Your Walmart, for example, and you know that you're gonna take 30 trades a week. So you're gonna sell 30 widgets. 20% of those widgets are just going to be junk. You're going to lose money on them. And you're going to sell a bike. The customer's going to come back to Walmart screaming at you, telling you that this is the worst bike ever and they want their money back. And so you give them your money back and you throw the bike away. So you're going to lose 20%. The other 80%, some are going to be big winners, some are going to be small losers, some are going to be small winners. And when you add up sum total of those, you're going to be fine. So what's the point with that, Mohammed? The point is, you can't think about one trade being the entire difference. You've got to think about the entirety of the trades. So one of the things you can do with that is try to hide your P&L on the workspace when you're trading. If you have a way to multi-charts, it's one thing I like about multi-charts. I've been trading that more and more with interactive brokers. And I like TradeStation. And TradeStation, I'm just trying to get away from the matrix a little bit, but I really like TradeStation's charting. But the point is, try and hide. If you can't see the P&L going up and down in the trade, it's going to affect you less. That's the whole point. So how do you journal? What does your journaling look like? How many metrics do you use for journaling your trades? Yeah, an easy one is type 1, 2, 3, and 4 trades. That's the first thing. So the first thing I want to know in any trading is, did I actually follow my plan? And what percentage of my plan did I actually even follow? And this is going to be one of those things that I'm going to talk a lot about in the upcoming Systems Academy class. And that is basically, we're going to talk a lot about breakouts and second legs because that's most important. And then the next thing is, how do we actually trade them? And then how do we actually journal and document what we're doing? So the first thing is, we got to learn about breakouts and second legs. The second thing is, we got to do enough research and study to actually understand what it is that we want to do and have a high enough confidence level to take the trades and have an expectation on the outcome. And then the third is, we're going to measure the data. There was another gentleman who did really well in Systems Academy, and he was taking a bunch of trades, and he basically, took something called an I1R. And it's basically, a retest of a breakout. There's more to it than that, but that's basically the idea. And what he figured out is, after recording all of his trades, I1R was doing extremely well for him. That was his best trade that he was taking. And so he got the idea, what if I just got rid of all the other trades? If I just focus on I1R, I'll get 1 or 2 trades a day, and that's perfect. And therefore, from journaling and having data on his trades, he realized that all the other trades just weren't really doing anything for him. And therefore, that's what he did. Expanding triangles are hardest for me. That's because most expanding triangles are leg 3. And so when you see a big breakout, it's usually the third leg. An expanding triangle is a wedge top and a wedge bottom. And therefore, when you're going here and the market's going down, it's all of a sudden forming a wedge bottom. If you trade purely discretion, how do you categorize type 1, 2, 3, and 4? That's a great question. One of the greatest misconceptions about discretionary trading is discretionary traders don't have a system. That is the most false thing ever. Think about Al. Small pullback bull trend. I only want to blank. I only want to buy. Small pullback bear trend. I only want to sell. If limit order traders aren't making money, what does Al always say in the trading room? I'll let someone else get rich. I'm not going to buy. If the market's going down and limit order traders aren't making money, I'll let someone else get rich taking a limit order trade. Al has a lot. The point is this: Al has a lot of sayings that are kind of funny, and it's his way. It's his trader's imagination. It's his way to keep him on the right side of the trade. It prevents him from doing something bad. So we call that a rule-based discretionary system. There's kind of 2 boundaries of trading. There's completely full auto, which means full automated trading, which is, I know a couple of people who are building automated systems. One is a really, really bright kid, He's extremely smart, and he's done really well with that. But I mean, most people fully automated systems are way out of the realm for most people. And the other issue with fully systematic systems is if you have a more rule-based discretionary system, you're going to do a lot better because you can apply context to the market. So the point is this: whenever you hear someone saying that they're trading discretion, they have, I call it guardrails. It's kind of like when you're driving a car and you're on the highway and you have kind of a guardrail system to keep you from going on the other side of the road. That's basically rule-based discretionary. It's going to keep you in the boundaries of the road. Or it's even kind of like you have, markings on the road to indicate where the traffic is and what lane, where you're supposed to be. That's rule-based discretionary. It's going to keep you safe in the boundaries. Are you opposed to adding to winning positions even though you can make your average entry worse? I think the single worst thing most traders do is they add to their losing positions. I think the best thing most traders can do is learn to add to a winning position. I call that buy the close rally, keep buying closes, sell the close sell off, keep selling closes. I talk a lot about that in Systems Academy as well. And you hear me talk about that in the trading room and other places as well. The point is this: most people scaling into a losing position works really well. The problem is when you're in a small pullback trend. So what individuals do, they start buying and scaling in lower to a losing trade, and they end up taking this incredible loss, and it's just really, really devastating. So I think until you really know what you're doing, I think this, adding to a losing position is just really bad. But adding to a winning position is great. Consecutive bull bars, buy the close, buy the close, buy the close, buy the close. You're going probably higher. Great thing to do. But in order to do that, you've got to have a strong expectation of what the breakout's going to do. So we must create charts about each setup. Is this true? Well, there's a lot more to it than that. The point is, you really have to understand the expectation behind the actual trade. That's really what you have to figure out. Yeah, discretionary traders have systems. All right, so the homework. So does anyone remember what the homework is for this live stream? What homework did I give everybody? Let's see who's been paying attention. So there's one thing I mentioned as far as a homework assignment for the weekend, and I'm going to read the comments. So I want to see, give me some information as far as the trading results, the type 1, 2. So basically the homework was I want you to document type 1, 2, 3, and 4 for your trades this past week. How many trades? So there's a gentleman up here that had that, Muhammad. He said 42% of his trades were not in his plan. And I found that what happened was when he got a drawdown, he broke his system. That's a really, really common situation. So I want everyone to, choose a system and create it. That's a pretty detailed process. You can go that route. There's a lot that goes into that, and I'm going to talk more about that. And the first thing is, over the weekend, I want everyone to count how many trades are of category 1 through 4. So type 1, 2, 3, or 4. And I want you to put it in the comments, and I'm going to read it, and I'll respond to them. You just may have to give me a few, but I will respond to them over the weekend. So let's see who in here can have the highest type 1 and type 2 trades. And we'll go from there. So overall, I appreciate everyone joining me on this Saturday. Saturdays are a really, really great time to really learn and really think about the trade you're trading and how you can improve your trading as a whole. The market's closed. It's really, really important. Atomic Rage says, "Is this a recording?" This is not a recording. I am currently live, but and overall. And lastly, does anyone remember? Was anyone able to make a little bit of progress yesterday with James and I's recording about, or James and I's discussion about signal bars? I'm just curious. So James and I had a discussion about signal bars and why they're so important and why one must really learn what their signal bar is. Was anyone able to basically figure out what their signal, either figure out better what their signal bar was, or did anyone get anything out of that? I'm just curious. Knowing exactly your signal bar, yeah, that's what I'm talking about. You have to know your signal bar, which is part of your setup. If you don't know what your signal bar is for the particular trade, then you're going to have issues with your trading. Trader Chick says, yeah, it was interesting. I found out I might not even understand what the actual signal bar is on the trade. I thought I did, but maybe I didn't. A signal bar. So I want to say one thing, because a signal bar is a reason for entering the trade. A breakout is a signal bar. A stop entry can be a signal bar. Every bar can be a signal. This right here is every one of these bars are signal bars for something. You have to understand what the signal bar is in relation to the trade that you're wanting to take. And that could be a reversal bar. This is a signal bar here. This is a signal bar here. All of these are signal bars. But you have to understand what the signal bar is in relation to the setup that you're taking. I'm working on a system based on buy the close, sell the close. Can you please tell the difference how you think about it compared to a breakout? So atomic rage, this tells, this discussion right here, what this tells me is that you do not understand what a breakout is. You may think you understand what a breakout is, but I really do not think that. Fix one thing here. You may think you understand what a breakout is, but a buy the close, sell the close is always a breakout, and therefore, you really need to spend time thinking more about that. It's a step in the right direction, but always a little easier if you can see examples of someone who has done it before. Yeah, there's a really good video. I'm actually going to pull it up here because I think that. I'm going to turn this off for a second. Well, actually, it's right here. So Ken, I think a lot of people really loved Ken's interview with Ali. And this is actually, I'm going to see if I can just copy it. And the point is, if you just watch the video, Ken talks a good bit about his overall system. And his system is just basically a breakout. And he talks a lot about it. And I think a lot of you may find, some pretty good just overall value in it. So take a look at that, and that may give you some insights. And Joe, one of the things you can also work on is some sort of 3-bar microchannel system. There's a lot of pieces that go into a system. And so we call that a back of the napkin kind of study. You have to take the idea and, it's kind of like you're looking at an idea. I'm going to trade 3-bar microchannels, and I want to take a look at 100 examples and see, is there any validity to this idea? So for those of you that, it's no secret, I've talked about this a lot. Ali's talked about it a lot. The best place to start is a breakout in the second leg, and in type 1 in leg 1, and don't trade the third leg. But again, there's a lot that goes into that. And if you want to talk more about it, you can certainly feel free to reach out in regards to Systems Academy, and we can have a call about it. I don't pressure anyone at all in regards to that, but more than happy to see if someone's interested in it and just have a conversation about it. Another great resource, if you don't want to do that, which is totally fine, Ali has those PTM recordings are really popular. Those are helpful for sure. You've also got, for some of you, I think a really big one for some of you is the Brooks Trading course. There's plenty of people in here that I don't think they won't admit it, but they've probably only watched the video course maybe once. or maybe half. And when I say the video course, I mean the Brooks trading course. So maybe a good thing to do on a Saturday is to dive into some of those videos and learn some more. Yeah, breakouts and second legs is probably the highest. You know, there's a video here. I'll just go ahead and share. Let me just see if I can pull it up here really quick. This is the last thing I'll say. Let's see here. This will be no surprise, but I'm sure you all will not be that surprised that this video here, the highest winning trading setup, I'm sure all of you can guess what the trade is. So basically buy the close, sell the close, breakout on a higher time frame. No, that's not exactly what I'm saying. What I'm saying, buy the close and sell the close, is a breakout. All right, so I was hoping this video would be like 15 minutes, but it was instead 47 minutes. I hope you all got something out of this video, and stick around. James and I are going to be doing a lot of live streams and just kind of talking about trading. But again, remember, type 1, 2, 3, and 4. If you can't do it, then you probably don't. There's probably something that you're lacking as far as your trading plan. Thanks everyone for watching, and we will talk very soon.